Hey everyone, Tim Dial here with Nexa Mortgage and getting ready to take a trip to visit some family in Indiana, but I wanted to put a quick follow-up update video on here about the markets. We had a crazy day yesterday because of the market. We took a big hit. We've taken a pretty big hit over the past 5 days overall, but we had a nice bounce back day today, so I wanted to cover that a little bit here. This is going to be really short and sweet, so I'm going to go ahead and I'm going to share my screen and get into that a little bit here, look at the markets and stuff. So this has been a bounce back day. Let's get into what it currently looks like. On the 30-year, we're going to have to refresh. It's not showing up yet. Here we go. On the 30-year, we bounced back by 33 basis points. So not only have we made up what we lost yesterday, we've made up what we lost the previous day as well. So that's pretty nice that we've made up, but we've gotten back above this level of resistance here, which was the 50-day moving average. And we should be able to hopefully stay above that level by the end of the day today. The big reason we had the bounce back was because there were new numbers that came out today, which is the PPI report that came out today, and it has some components in it that are also within the PCE, which will come out later this month, which comes out, I think, in about 2 weeks, which is when the new PCE will come out. The PCE is actually the Fed's favorite measure of inflation, and because this what came out today has some of the same components in it, and they fell quite a bit, and so that tells the market that the PCE report that the Fed gets later this month should have a much better result on inflation than what we saw yesterday with the CPI report that came out. The Fed likes the PCE report way better, and so if these components are within that report and they fell quite a bit, if that shows that the overall PCE is also going to fall nicely, then that's going to really bode well for inflation and for what the Fed looks at. So hopefully, based on this where we are right now, hopefully this will continue to recover tomorrow and we can get up into this range before the end of the week. That's kind of the hope. Looking at the 10-year, we like for the 10-year to fall, and it was way up here. Now it's fallen down here. Hopefully it can get below this level of support at some point within the next day or two. So anyway, that's pretty much it. That's what we're kind of looking at right now. Wanted to cover that real quickly before I take off. But if anybody has any questions, feel free to give me a call. There's my office number up here. You can also reach me on my mobile phone, which is 615-995-2615. Let's keep holding on for now. If you are thinking about refinancing, I still think that these markets are going to improve a lot before we need to do that. We would like to see this 10-year get down into this range before we start to refinance some people. And then we would like to see this 30-year, let's go back to that. We'd like to see this 30-year get up into this range, get up above where we were here. We'd like to get it back to where we were like September, or maybe even a little bit better. And so that's kind of what we're looking at. Let me know if you have any questions. Thanks. Bye.